Now, thanks so much for staying on and good to have you back. Before the break, we were interacting with the management of Astral, and now let's put the spotlight on Blackbox. Major order win coming in for the company, and that's one of the reasons why the stock is in focus. So let's try and see what this move is. 7.25% uptick on Blackbox today. We've got the management, Mr. Sanjeev Verma, the CEO of Blackbox, joining us on the show. Mr. Verma, hi, morning. First let's talk about the big order win, and congratulations for this. The new data center order from the new Tier 1 US hyperscaler, it's valued at around 1240 crore rupees. What does this mean for the company? Should we expect many more orders from the new data center opportunity and from US hyperscalers going ahead?
Yeah, of course, it's a major win for us. I think we have been focused on around AI infrastructure with hyperscalers, and we continue to grow that. This is a new win with the large hyperscaler in the US. Our pipelines with hyperscalers remain very, very strong. The investments by the hyperscalers each quarter continues to grow, so we remain very, very positive, and we expect to win many more as the year goes by.
And Mr. Verma, I understand that it is difficult to predict, but can you quantify the kind of opportunity that you see from US hyperscalers? You already had been winning orders from a couple of US hyperscalers earlier as well. And now with this addition, how many more orders should we expect from this particular category for the rest of this year?
You can surely expect several, but in general, I had quoted earlier on your channel that we expect for this year our order booking to be at least 50% more than the last year, largely driven by the hyperscale push and the AI infrastructure. So I think we have guided to that range. I think actually we're looking at even better our bookings for this year, backlogs and bookings to be this year to be better, around 50-60% growth than previous year. So yes, large opportunities, huge pipeline. As we mature, our relationships are deeper. So more sites with hyperscalers, more neo hyperscalers, AI colo providers, neo clouds. So the whole spend in that space, as you know, over the next 4 years is very, very massive. And Blackbox is a direct beneficiary of that. So we expect to win quite a bit in the year going forward, the year ahead as well.
Okay, and this FY27 guidance that you have of 10% on the margins, are we on track for that?
Yes, we are on track for that. In fact, at scale we can do better, but we are on track.
Okay, and the first quarter earnings were also very strong. If you can take us through how execution is likely to play out in the second and the third quarter, because better execution was largely why the numbers were very strong in the quarter gone by. Now with the order book also very strong, do you expect the trend of higher execution-led revenue growth to continue for the next few quarters?
Yes, I think I had quoted earlier, transformation is behind us and growth is ahead of us. So we expect it is a function of execution. Our order backlogs are very, very strong. Our bookings expected to be very, very strong. The delays that we had earlier on are largely no more there this time. So we expect going forward both sequential growth and of course year-on-year growth. And we have guided the year at this time in the range of 25% or more growth in the coming year, coming at the back of our backlog being executed, and also good order booking that we expect in the coming quarters. So the answer is yes, both sequentially and year-on-year we expect to grow.
Understood. Just want to talk about your pricing environment. Right now that looks supportive. Your demand is outpacing supply as well. But give us a sense of how much your costs have increased by, if at all, and what's the outlook on pricing action? Have you been taking hikes? Are you planning on passing on some costs?
Yes, I think there will be, when the demand is there, there is a shortage of supply. So clearly there is a challenge of pricing. But this is a more of a at scale execution partner-led business. You don't win this just because you price more or price less. So I think it's pretty much from that perspective, although there's a price challenge with respect to cost going up, but I think the need for AI hyperscaler is extremely high at this time. So we are seeing our margin trending in the range that we expect, and therefore our confidence in producing the operating margin remains. Although there is a supply chain shortage, and that's of course is an advantage to Blackbox because our ability to invest in training and partner with our hyperscale partners or even enterprise partners remains very, very strong, very deep relationship. So we are expecting the yield from our customers, what we expect will continue to be stronger going forward.
While we are talking about margins, Mr. Verma, the contribution that you generate from data centers is at about 17% currently, and that is likely to inch higher to about 30%. Is this segment more margin accretive as compared to your current margin profile?
So it will remain at margin or accretive at scale. There's a function of scale because the order size is a very, very large in this case. So from that perspective, your overall overheads continue to be shrink as we get into scale. So it remains accretive to us, or even better as we start to build more scale from that perspective.
Okay, sounds good. Very quickly, Mr. Sanjeev Verma, can you give us a sense on whether are you looking at any inorganic opportunities as of now?
Well, I think we have gone public with respect to our plans of 2 billion. Out of that, about 18,000 crores, 6,000 crores is expected to be inorganic. We executed inorganic earlier last quarter. Some part of the revenue has come this quarter, the company 2S in LATAM. We continue to look for our inorganic growth engine as well, but it must be accredited to us and our shareholders, either a geography or a capability. So it is in the pipeline. We continue to look at it at the right moment when something comes up. I'm sure we'll have a better discussion on that, but we'll continue to focus on that as well. It's a dual engine for us, organic as much as inorganic.
Right, organic and inorganic growth, and we'll keep interacting with you as and when we have more data on this. But Mr. Verma, thank you so much for taking your time out and joining us here on ET Now.
Thank you so much.